As the second quarter earnings season kicks off, Bitcoin is bracing for a significant impact on its market. An otherwise uncorrelated asset, Bitcoin has ducked its popular safe haven status to rally and plunge alongside the U.S. stock market. Since March 2020, the benchmark cryptocurrency has formed an erratic correlation with the S&P 500. It last week hit a record high. That leaves Bitcoin exposed to macroeconomic narratives. The impact was evident after the U.S. Department of Labor published an optimistic non-farm payroll data on Friday. Bitcoin rose alongside the S&P 500, breaking towards its technical resistance level of $9,400. But heading into the new week, the cryptocurrency is facing new challenges in the form of corporate earnings reports. Influential U.S. firms will release their second quarter results in July 2020. It would provide investors a detailed outlook on how the U.S. economy fared during the COVID-induced lockdown. The reports would also follow an impressive stock market recovery from its March 23 nadir. Yet, specific reports show that S&P 500 earnings will be strikingly divergent from its bullish performance. American banking giant Goldman Sachs has authored one of these studies. Analysts led by the bank's chief equity strategist, David Kostin, wrote in a note Friday that they expect S&P 500's earning per share to plunge by 60% in Q2. If realized, it would be the U.S. benchmark's sharpest contraction since the 2008-09 financial crisis. A weak earnings report will prove that the post-March rally in the S&P 500 was, in part, speculative. It may end up negating part of the index's recent gains. That could also expose Bitcoin to similar downside risk, given its growing correlation with the U.S. stock market. Equities are also showing signs of trouble. Futures tied to the S&P 500 on Tuesday wobbled between gains and losses as investors awaited Q2 results from the American banking moguls, including Goldman Sachs, J.P. Morgan, Citigroup, and Wells Fargo. Meanwhile, Bitcoin was trading 0.50% lower in a bias conflict zone. So it seems, the cryptocurrency's traders are waiting for the S&P 500 to establish its intraday bias before they decide on the direction of their next positions. Joāo Leite, the lead analyst at investment management firm Blockfyre, warned that Bitcoin is trading inside a bubble long-term. He cited a string of macro factors that may end up crashing both the S&P 500 and Bitcoin in the coming sessions. At the same time, independent analyst Michaël van de Poppe believes Bitcoin will not go down below $9,000, photo by Marvin Esteve on Unsplash.